Hi everyone, check the pinned comment and let's go through my preferred bullish and bearish scenarios on all the time frames, starting with the macro bearish scenario, where this is a 5-wave impulse to the upside followed now by a 3-wave correction to the downside, with wave Y having targets of basically 13k and below. I don't really like this wave 4 over here though, because this wave 4 is shorter in time compared to this wave 2, and usually a wave 4 is longer compared to a wave 2, so that makes this scenario for me a little bit of an alternative scenario. The minimum target for wave X is usually hitting the 0.382 pulled from the all-time high to the low of W. And as you can see, we are very close to hitting it. It is sitting at currently 29.7, 29.6k. Also in confluence with this support resistance area over here, weekly order block for then a potential short trade entering over here, laddering in, stop loss safely above, trading it to the downside in this particular scenario. If we then go to the bullish scenario, it looks a little bit better, where this is a 5-wave structure, 1, 2, 3, 4, 5, with inside this 4 a WXYXZ correction. Now over here, this wave 4 bounced perfectly on the 0.5 Fibonacci, taken from the low of 2 to the high of 3. It also bounced exactly on the 0.618 Fib time, also taken from the low of 2 to the high of 3, so for some extra confluence. And also there was a high volume peak at the lows, which can signal a reversal area, just like it did with wave 2 over here when it ended in the golden pocket. This volume peak was the beginning of that very big run to the upside. Potential targets for this wave 5 are between the most common target area, 98k and 174k, and the more rare target area in this scenario is between the all-time high and 98k. There were basically two trading setups for this scenario. The first one was entering right above the 0.5, as the maximum target for a wave 4 is the 0.5, so you won't expect to close weekly candles below the 0.5. So one could enter over here, stop loss somewhere safely below, and then trading it to the upside, now in profit then of course, or wait for a little bit of a retracement, which is the more safer option. Enter the longs in the retracement, stop loss below the low of wave 4 now, because that's the clear invalidation, and then trading it to the upside for a wave 5. If we then go to the high time frame bearish scenario, then this is what I'm looking for. A WXY is the scenario where here is a W expanded flat in wave X and then looking for downside in this wave Y. Now the expanded flat is a 3-3-5 wave structure, so this is an impulsive structure with then a 1, 2, 3, 4, 5, wave 4 bouncing perfectly on the 0.5, and we are currently ranging over here in the most common target area for wave 5, which is between the 1.236 and the 1.618. The 1.618 is also sitting at 29.6k, just as the wave X 0.382 pulled from the all-time high to the low of W. So these fibs are exactly at the same level, which is interesting. Also, of course, they are part, or at least they are inside the support resistance area, which makes it interesting as well. So that 29.6 to basically 31, 32k is just a very interesting area in general. We're also currently ranging inside the most common wave C target area between the two 1.618s, as you can see over here. And one basically doesn't expect wave 5 to be extended. That's why the invalidation is up here at 34k. Wave 3 was already extended, and if wave 3 is extended, wave 5 it's very rare for wave 5 to also be extended. So you would expect wave 5 not to be extended and reach this area over here. So that's why the stop loss for this potential trading setup is right there, entering the shorts inside the most common wave C target box basically, and inside this wave 5 target area, stop loss safely above, trading it to the downside for wave Y, where also the wave Y scenario has some nice confluence with backtesting this area over here that we haven't seen since the 2020 bull run. If we then look at the more bullish scenario, the correction, the bear market is already finished. This was a 3-wave in W and then X, Y, X, Z. Each of these are 3 waves. Wave X over here just missed out on hitting the 0.382, which is very rare, but in this scenario it's valid, and wave Z ended right on top of its rare target, which is the 0.618, pulled from the all-time high to the low of W to then the high of this X. However, even though wave Z, the 0.618, is a rare target, this is of course on the macro time frame, the 0.5 Fibonacci here as well. You don't want to see candles close all the way here below the 0.5, so this is very valid and very good as well. If we then look to the upside and we look at this impulse, we can see again 1, 2, 3, 4, 5, and in my opinion it would be nice if wave 1 would finish somewhere here. Of course, the alternative is that this is a 1, 2, 1, 2, and then you expect a 3 to the upside, but then I would still expect a like resistance over here for then a 2, 3 or 2, 3 in this scenario, because this is such an important resistance area, 30k psychological level. The last time we had a little bit of a range over here, support resistance area. This is a weekly order block as well. We just had the FIBs, the 1.618 over here, as well as the 0.382. There's a lot coming together in this particular area, as well as also a weekly and a weekly naked point of control around 30k. So it's just such an interesting area, and in this particular scenario, shorts can be entered around this area over here. Stop loss safely above, trading it to the downside in a wave 2. And then the most common targets for this wave 2 are between the 0.5 and the 0.786, which is basically between 21.1k and 17.7k, with by far the most common target being the golden pocket. Also a nice confluence with this low over here for maybe a liquidity grab, and then trading it to the upside in the long setup that I show over here, when one can enter potential longs, stop loss below the low, and up we go to the moon. If we then go to the medium time frame, I have two scenarios that I like to show you. I have the very bullish scenario in this scenario, the very bullish scenario, and then I'm going to show you, and the bearish scenario, where over here wave 1 is already finished, wave 2 is also already finished. I don't really like how short wave 2 is though, so compared to wave 1, wave 2 is very, very short, not in how deep it went, but how much time it took to form wave 2. It took about 23% of time to form wave 2 compared to the time it took to form wave 1, which is very, very short. Usually it's 38%, and that you can find that with the FIB times. But yeah, let's zoom in, because of course this scenario is so far not yet invalidated, where this is then a 1-2-1-2 setup, and then we would expect a big explosive 3 to the upside. Now in this scenario, this wave 2, well, in an impulsive structure, wave 2 has a minimum target of the 0.382, which is a rare target already. But over here, this wave 2 actually missed out on hitting that 0.382. Not very nice. And over here, this blue wave 2, if this is another impulsive structure to the upside, this wave 2 also hit the 0.382. Actually bounced perfectly on the 0.382, but did not hit the most common targets for wave 2. So you have over here not hitting the common targets and actually not hitting the 382. Over here, wave 2 not hitting the common targets for wave 2. So this scenario is starting to become less likely by the day. And also this wave 2 took quite a while. Wave 2 over here is a sideways correction and not a zigzag, which is most common for wave 2 is a zigzag correction as well. And we just want to see volume kicking in. We want to see if this is a wave 3 of a bigger 3, mate. The volume should be like crazy. Like this should be the move taking us towards the like all-time high, pushing through all the resistances, big candles on the screen to the upside. But yeah, so far we're just ranging. So yeah, not the greatest for that scenario at the moment. My therefore currently preferred scenario is that this is then the high of a wave 3, wave 4, wave 5, and then this is the yellow wave 1 high over here, right? Or wave X. And then basically the last impulse up that we have, starting from the low of this wave 4 over here, is an extended wave 1 impulse. So we have over here wave 1, which is extended. So we have 5 waves over here in wave 1, followed by a wave 2. And if wave 1 is extended in Elliott waves, then wave 2 has the most common target between the 0.382 and the 0.236. And as you can see, perfectly respected before a move then to the upside. Wave 3 with an extended wave 1 does not have a particular target, so that is fine. The most common target for a wave 4, if wave 1 is extended, is in between the 0.382 and again the 0.236. And also here, very, very nicely respected, exactly what you want to see. And then the most common target area for wave 5, because wave 5 does have an important target area, that's between the 0.618 and the 0.786. Pulled from the low of 4 to the high of 1 to the low of 2 with the trend-based Fib extension tool, and then wave 5 should end somewhere inside this area. Now of course we already wicked inside this area, so you know, theoretically speaking, one can expect downside. Wouldn't mind a little bit more upside because we still have a little bit of confluence here as well, and the 30k psychological level and all that stuff. But of course, with Elliott waves, it is very common to ladder into positions because you never know where it might exactly finish, right? So first ladder, of course, was then in the low of this wave 5 target box, and then one ladders all the way to the upside. Stop loss safely above. Good risk management, have a good personal trading strategy. Don't trade because YouTube people say this is a setup. Have a good personal trading setup yourself. Trade your knowledge and not your emotions. And then eventually in this particular setup, trade it to the downside. So this is currently my preferred scenario. And if we go to the lower time frame, I have the bullish and the bearish scenario. So the bullish scenario in a little bit more detail and a cleaner chart as well is again wave 2 ending here. We have a 1-2-1-2 and we're willing to look for some upside, or that's what we want. You can see now clearly wave 2 ending on top of the 382 with a WXY scenario or 3-wave sideways structure. Very rare. The potential trading setup here is not the greatest because the stop loss is so long, and actually the setup that we had a couple of days ago in a video that I won't show now because, you know, it's in the past locally, over here was very, very good with the swing failure pattern taking this low and this low as well. That was perfect for then a trade to the upside, which already of course closed because we then took the double top. But in this scenario, you could hold on to a very big long position expecting a very big 3 to the upside. But again, we want to see volume, yeah, it just doesn't, as mentioned before, just doesn't look too great for the very bullish scenario. We definitely want to see candles going to the upside with big volume and big candles as well, breaking the resistance that hangs around 30 to 32, 34k. If we then go to the wave 5 scenario, where wave 5 is not yet finished, so we have again an extended wave 1 in this scenario, but now we're going to look more locally at what's happening, and I have a couple of different scenarios as well that I will show you. So this, look, I have 1, 2, 3, I have 4 different scenarios I want to show you very shortly. The first one is that this wave 3 ended over here, then we have a 3-wave structure in wave 4, a WXY, which is also perfectly fine for a wave 4, as a wave 4 tends to be more complex. So that's very nice. And then this move to the upside can either be a 1, 2, 3, 4, 5, and then wave 5 is already finished over here. However, if wave 5 is finished over here, and we would then also have the green wave 5 finishing over here, and we would now be on our downside. There's a couple of scenarios where the first one would then be, okay, this could then be an impulse to the downside. This is wave 1, 2, 1, 2, and then we expect a 3 to the downside. The main problem I have, however, is that there's no bearish CVD at the highs, and that means absorption. And that's actually what I really want to see when I look at turnaround points or pivot points on the chart, where eventually we might pivot for a very big move to the downside. I always like to see bearish CVD on the chart, which basically means that price is, price made a high over here, for example. It's making a lower high, but I want to see on the CVD, I want to see a higher high. So if we go to the CVD chart here at the moment, this is the high that we made, and you can see lower highs here, but also the CVD is going lower. So even though price is making lower highs, CVD is making lower highs as well, but instead you want to see lower highs on price, higher highs on the CVD, which is showing absorption, which basically means with the CVD as well, these lines show people buying or selling basically. And what you want to see is that more, like if the CVD line is higher, so a higher high on CVD means that over here with a lower high, more people are buying, so that more people are buying here than they were buying here, but the CVD, but the price is not higher than this high, so therefore you can see if there's absorption going on, like people are basically buying into a very big short position of a market maker or whoever it is. So that is what you actually want to see. You want to see a lower high on price, higher high on the CVD, which shows absorption. More people are buying. However, price is not taking the high over here. So I didn't see it, and therefore I have a couple of alternatives because I do like to see it. And of course, we still have the interesting target area of about 30k that I would like to hit as well. But again, no guarantees. That's why laddering in is always so effective. So this is one scenario. The other scenario is potentially a diagonal. So then this over here is a 5-wave structure, which then is finished. But then this green wave 5 moves up. And then in this particular scenario, we then have this as a wave 1, 2, because currently we hit the rare target for wave 2 in a diagonal, the 0.5, but not the common targets. So I would like a move to the downside then, but this then would be a WXY and then eventually to the upside. However, looking at more downside, we do have locally some bullish divergences. So with this pivot over here and the pivots that we made over here, we have currently a little bit of a higher low, but on the chart between, especially on the yellow chart, you can see we have a lower low. So a little bit of bullishness. And also if we zoom in locally, the blue chart over here, this low, we made a higher low on the blue, on the blue here, the blue line, but we made a lower low on the CVD on the blue line. So a little bit of bullish behavior going on. Of course, this CVD now already played out as we took this high, but it's still important to note and see for the context of Elliott waves that there is some bullishness going on, right? So we might not get this move to the downside in this particular scenario. And then I have another scenario where wave 5 is simply not finished. We're still looking for wave 5 to finish. So in this scenario, we have remove this. In this scenario, we basically have a 1, 2, 3, 4, 5, with then over here a 1, 2, 3, 4, 5 scenario inside the 3. But then over here, these lows are made right on top of the 0.5. Of course, these candles closed just below, but the candles right after actually very well respected the 0.5, and the rare target for wave 4 is the 0.618, but we didn't hit it. So because these are closed right on top of the 0.5, I would think this is valid at the moment, where this then is simply a 1, 2, 3, 4, and looking for a wave 5 to the upside, where if this is true, the most common target for a wave 5 is then in between the 1.236 and the 1.618, which also again means that these confluences are right inside the wave 5 target area. So that is going to be very interesting. I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I see you at the next one. Bye bye.